Boom. So I told y'all I was gonna be coming with more content, right? So this was my trade today. Coinbase. I did a put. It wasn't nothing really special, but I am just gonna get into kind of some of the particulars and the strategy of what I did and how I was able to get $305 over 100% on my trade before the first 30 minutes of the market even closed. So when the market first opens in the beginning of the market, if you look at a lot of stocks, you'll see that the bid and ask are far apart. Because when that market open, you got people that's immediately trying to sell trades for this price, and you got people that's immediately trying to box trades for the low price over here. And so in between that, while price is doing whatever it's doing, it's people that's meeting in the middle of that bid and ask, and they're locking in trades. I know I've said, so one of my rules, I really tried not to trade within the first 15 minutes of the market, but I also said I kind of don't like that rule. And the reason why is because I've ate off of it doing it, and I've also been burned off of doing it. So it is a fact. The first 15 minutes of the market is when the most manipulation happens. That's when traps happen, and you can get trapped on the wrong side of a trade when you lock in the first 15 minutes of the market. But if you know what you're doing and you pick the right side, it will be beautiful. Now, I feel like I'm pretty good at picking kind of the lowest price that I can pick in that bid and ask within the first 15 minutes. When I do that and I do it good and I get into a good spot, I'm automatically like $30, $40 up from wherever I entered it. Like I'm up off top. So how do I determine where I enter the trade and what's a good spot to enter the trade? So what I like to look for is I like to look for long wicks. Either way, long wicks are signs of rejection, strong rejection. So whether it's a long wick pointing up, that means that the sellers are rejecting that buy price, or a long wick going down, that means that the buyers are rejecting the buy price, the sell price. Either way, I'm looking for a long wick pointing in the direction. And when it has a long wick and a body going down or up, whichever way that body going, I'm following the body, baby. So this case, Coinbase opened up. Long wick, it shot up to 306. Long wick pointing up, got rejected, went back down to, what is that, about 301. And then it came back up. And all I need to see is that retest. Once I see that retest, and then I'm looking at the next candle to see, is that continuing to go up or is it going back down? Once I seen that third candle going back down, boom, I ended my trade. Put my stop loss right above the long wick. Roll that bad boy all the way down from 306. I think it hit, what is that, 292. So, like I said, I'm not doing nothing special, man. So, like I've said in my previous videos, trade with the market. Do not trade against the market. If you can look at this, you can see Coinbase has been in the downtrend since July 18th. Since July 18th, Coinbase has been in the downtrend. I've said this in multiple videos. When you trade, you want to be the little fish. Be the little fish riding with the whale. If the whale dropping off money and making the price fall, ride with the whale. Be the little fish. That's all I'm doing, being the little fish. The way that coin is dropping, you can literally buy an option contract. Make sure you get in at the right price. Set that bad boy up to expire 2-3 weeks out as far as you can, and just let that mug ride. You're going to make some money. Let it ride. You're going to make some money. So I'm not doing nothing special. I'm just riding away. As long as it's in this downtrend, I'm going to keep trading it down. And so if we look at the even bigger picture on Coinbase, I suspect Coinbase is going to drop down all the way down to that next level, which is $230. Now, Coinbase has dropped from around $440 to $291 already. That's a big ass drop. However, though, if you look at Coinbase historically, Coinbase gives that back all the time. Coinbase will go to $300, and for a long time, it would hit $300 and drop all the way back down to like $150. Like, historically, Coinbase is going to give it back. And historically, since I've been trading it, Coinbase is a very trendy stock, meaning that you can literally draw a trend line. You can look at Coinbase. You can find a channel. That's how I went from $300 to $30,000 in 2 months last year. So I'm about to do the same thing. I'm telling y'all, I'm gonna keep posting. Y'all finna see me eat. Cause I'm finna ride that mug. I'm finna ride that mug all the way back down to 230 till it breaks above that red line, that red trend line that I got. Till it breaks above that, I'm going to keep trading it down. So, like I said, it's nothing too complicated. You just have to make sure you get in at the right time. That's the most important thing. Making sure you get in at the right time, at the right price. Set your expiration to the right expiration, and you can let that mug ride. But y'all about to see. Y'all gonna see.